Yonah, thank you so much for doing this interview for our Rent Magazine readers and our AAOA members. Lots to talk about with regard to cost segregation. You wrote a really detailed article about the ins and outs of 100% bonus depreciation. So we want to dive into that a little bit. And really, I think where we can start is talking about what's the biggest opportunity that this permanent or quote unquote permanent 100% bonus depreciation creates for landlords and just, any real estate investor in general this year and even beyond.
Absolutely. I'll just start by saying it's huge. It's huge to put it in other words, but it's really, when the 100% bonus depreciation was first introduced back in 2017 and has been then phased out for a few years and has now come back and reintroduced. Back in 2017, 2018, we saw a huge amount of a boom basically to the commercial real estate and multifamily industry. Sure, that had a lot to do with maybe low interest rates, but the market was, I think, at like an all-time high then in my memory. So I do see that 100% bonus depreciation had a big factor to play in that back then. So I do expect that's probably my biggest prediction right now is that it's going to have a similar effect this year and going forward in terms of new acquisitions and the market kind of shifting a little bit back to where it was back then.
Yeah, absolutely. That was one of my other questions for you was whether you expected this to change or influence the behavior of investors. If you see this really leading to a rush in acquisitions after, January of this year, right? So
Sure,
anytime from now on, are you seeing that already? Or, I mean, you speak so closely with your clients, you have so many of them. Um,
sure.
is it already happening? Are they already talking about this or doing it?
It is. It's already happening. It's been, throughout the past 6, 7 months, really the past few months, because yes, it was introduced to be effective from January 20th, but only came to being,
Right.
in the bill that passed a couple months ago. So yeah, I've already heard so many people, literally like at least once a day, people reaching out to me. What's the best property I can buy with
Mm.
100% bonus depreciation? People are really interested in that. And there are certain asset classes that are better for bonus depreciation than others. And so it's something people want to know. People want to, they've been waiting for it. A lot of people were, waiting to see if this bill was going to pass and in order so that they could buy something this year, reduce their tax liability. And really, that's what it comes down to, right? People don't want to pay taxes. And if this is a strategy to help them do that, not do that, then, it's a really great opportunity.
Absolutely. I mean, literally nobody would want to pay taxes if they didn't have to. So that's great to know. I'm thinking too, for those that aren't as familiar with
Hmm.
bonus depreciation, cost segregation, can you give us just a quick, brief overview of how it works and I guess also whether or not this, you said different asset classes might benefit more than others. For a smaller rental property owner who maybe doesn't have, a huge portfolio, can it still benefit
Sure.
them as well?
Yeah, absolutely. So let's start at the beginning. What is cost seg for those of our listeners that may not be so familiar with it? And I'll include in that how bonus depreciation works, and as well as which asset classes, or obviously for smaller investors, at what point does it make sense? So cost seg, think about it as a cash flow mechanism. Okay, so basically it's an advanced form of depreciation. Anytime you buy a property besides for your primary residence, you're able to claim this deduction called depreciation. Now, it's a borrowed term. It's not actually, doesn't actually mean that your property is going down in value. It just allows you to take this deduction as if your property was going down in value. And what cost seg does is it takes that little deduction that you would have every single year, and to be honest, it's not that little. It's actually, it can be pretty significant because it can
Mm-hmm.
be, 2 to 3 regular depreciation, straight line depreciation can be, 2 to 3% of the property value, which, is not insignificant, right? For $1 million property, that might be a, a $30,000 deduction every single year just for buying it. With cost seg, it allows you to accelerate the depreciation of certain components in the property to a 5 or 15 year schedule, thereby allowing you to either double or triple your depreciation deduction during the first few years because you're essentially, writing off a bigger amount of those 5 year deductions in the first year. So that can include stuff like furniture or appliances or fixtures, cabinets, countertops, shelving, all that kind of stuff that's non-structural or non-essential to the structure. All of that depreciates on a 5 year schedule. Once we do a cost seg study identifies what those items are, how much of a deduction we can actually take, and then creates this detailed report showing you what your deductions can be. So that's regular cost seg in a nutshell. Again, a cash flow mechanism because essentially what it does, it allows you to take bigger tax deductions during the earlier years of ownership, reducing your tax liability, pay less taxes, you have more money to invest. I mean, that's as simple as it gets, right? Um, how bonus depreciation works, it says once you've done that cost seg and have shown certain components on a 5 or 15 year accelerated depreciation schedule, you have the option to take 100% of those deductions in the first year, right? So it can for multifamily properties, for example, can be 20 to 30% of your purchase price that you can actually take as a write-off in the first year. So I mean that's huge. You buy $1 million property, that's like a $200,000-300,000 deduction in the first year. That's, I mean, again, it's just huge. Um, so at what point does it actually make sense, right? It can be for smaller properties, but typically, if it's under $200,000 purchase price, I typically don't recommend getting a costing done. There can still be some benefit there, but the cost typically outweighs, the benefit to a certain extent once you get lower than that. And so that's a pretty low threshold if you think about it, right? If you're buying a multi, especially if you're in California, right? You buy a duplex, it's already like $1 million, right? So there's or probably more right, at this point. Um, so the threshold is pretty low, which means almost every person who is a real estate investor can benefit from this to some degree or another.
That's amazing because I think oftentimes some, real estate investors just getting into it might think maybe it's not for them. But that's such a low threshold, I think, with prices the way they are now, that you're right. Almost anybody could benefit from it. And I suppose going with what it costs to do the cost segregation, it's really for the cost segregation study. And that's something that you do as well. Is there anything that our readers should be aware about when choosing a cost segregation study specialist or company to work with?
I think it's really important, obviously, to have someone who has a nice full beard. That's a really important part of choosing the company. No, I'm just kidding, obviously. But no, you want to make sure with any vendor or any partner that you're bringing on, you want to make sure that they're professional. You want to make sure they've been in business, they have a track record. Obviously, Madison SPECS, we've been doing this for 20 years, the biggest national company around. So I can speak to that. But probably one of the most important aspects of it is, will this hold up in the event of an audit? No one wants to get audited, but it does happen. And it's not very common, to be honest. It's very, very low percentage of people get audited, but if that does happen, what's going to happen? And so you want to make sure, you want to be rest assured that it is going to stand up. We have a 100% track record. Any of our clients who have ever been audited, in terms of our cost seg reports being looked at and having no change whatsoever to them. So that's something you can rest assured. There are some companies out there that won't provide a full engineering study. They'll rather provide like what's called a desktop or a rule of thumb study. So kind of like comparison using some sort of software as opposed to having an engineer actually visit the property and creating what the IRS considers the quality cost segregation study. So that's another thing to look out for. There are, like I said, there are some cheaper kind of do-it-yourself online versions of them, but that won't stand up in the event of an audit. So it's really just a question of, okay, do I want to pay a few $1,000s to get it done or a few $100 and risk the event of being audited and not standing up? So I think that's probably the most important factor.
Right. And are there any other mistakes that you see investors make when trying to use or take advantage of the bonus depreciation?
There are a few mistakes. I think the most common mistake is people thinking that they can use the deductions no matter what. And what I mean by that is there's a professional designation called a real estate professional, which means if you are full time, you or your spouse are full time in the real estate trader business, which means you're either a broker, a realtor, property manager, right? You're doing acquisition. You're basically, you own real estate and you are actively involved in the business. you are considered a real estate professional, which means you can use the deductions from cost seg and from depreciation to offset any source of income that you have whatsoever. However, if you're not full time and you just, you have a W 2, but you have a couple rental properties, you're limited and you can only use cost seg to offset your passive or your rental income, which can still be extremely beneficial, but you cannot use that to offset your W 2 income unless, again, you or your spouse are a real estate professional. So that's a big mistake I think a lot of people make, thinking, oh, I'll get the cost seg done, won't pay any taxes whatsoever, regardless of, if you're a real estate professional or not.
Yeah, and it's a little misleading, the title, because I think we could all say we're real estate
Of
professionals,
course,
right?
you're a real estate
But
professional, right?
sure. But I've actually read the qualifications for what it takes, and it's actually pretty in depth. And you do have to have logs of hours and really be able
Right.
to show that you are truly working that much just on the property management side of things, which is hard to do if you are a W 2 employee anywhere. I mean, I'm sure many people do, but yeah, it's not the majority are working that much.
It's very
So
difficult to prove. It's very
yeah,
difficult to prove. Yeah.
definitely. I can see that. So I think really what I want to end off here with is looking ahead. If you think that Congress will keep this incentive permanent, obviously we don't have a crystal ball here to know for sure, but I mean, that's what it seems like, right? That's what we're being told. Is that what you're foreseeing as well? Is there any sort of plan or anything that people should take into consideration now about how maybe it could or could not be permanent?
Well, the bill that was written, the big beautiful bill, included, from 2025 onward, 100% bonus depreciation permanent, which means unless you have another tax reform with another administration, later down, which obviously gives us at least a few years runway.
Mhm.
If you have another administration that comes and makes a new tax bill outlawing that or wiping that out, that would be the only case where I would see that happening. I don't see that to be too likely because the fact that it was introduced back in 2017 and was only phased out within that original bill and now reintroduced, it means it's on it's on the radar for everyone. They wanted it originally, they brought it back. It's something that is important. It helps, create jobs. It helps, people. It's not just for real estate investors, by the way. This can also be for business owners and for people who are in manufacturing or people who own properties who have businesses. It can be extremely beneficial for them as well. So I do think for the economy, it's actually in everyone's best interests to keep it. Obviously, for real estate investors, we get like an extra special added benefit to it. But yeah, I definitely see this staying permanent. I don't have a crystal ball, but I don't foresee it being reversed in any way.
Well, that's great news. And also, in closing, Yonah, if you could tell us how our readers can reach you if they are interested in doing a study or just to connect with you because you have such great content. Also, you're a great educator. So I'd love to tell our readers where to go to find you.
I appreciate that. I am found pretty much on all the social media platforms, so you can don't just give me a follow. I don't like that. I like to actually know who you are. So take 10 seconds, write a little note. Let me know that you heard this or you saw the article, and I'd love to connect in any way. You can also go to our website, yonahweiss.com, or Madison SPECS, which is our company website. But yeah, love to provide any education and connect with anyone on an individual level.
Wonderful. Well, we'll put your information in the caption and at the end of the article as well for people to connect with you. Thank you so much for doing this interview for Rent Magazine.
Always a pleasure.